This is Gerardo Del Real with Resource Stock Digest. Joining me today is the president and CEO of Skyharbour Resources, Mr. Jordan Trimble. Jordan, you've been on the road. How are you today, sir?
I'm good. Yeah, it's been a busy few months, a lot of travel and conferences, and it's been an interesting market as we discussed offline, a lot going on. Right now, it's been volatile, but looks like we've rebounded from recent lows in the uranium market, and I'm expecting a very exciting and positive few months ahead as we work our way through the rest of the year.
I'm expecting a very positive a few couple of years, if I'm being perfectly honest. But we can definitely start with the next few months. I don't think it's a coincidence that Skyharbour is up, some 16, 17% here in the last week. And honestly, that comes on the heels of the uranium spot price not really taking off, just putting in what looks to me to be a pretty definitive bottom at current levels. You've been on the road, you've been marketing, you've been speaking with people behind the scenes that have their finger on the pulse. What was sentiment like for you during your travels?
Yeah, I mean, look, we have a pretty good sense, talking with other, industry experts and investors and, the pundits in the industry. If you look at the kind of the price action over the last several months, there was, as I mentioned, volatility as we discussed, and, it was a very, very hot January. We saw obviously the uranium price, the spot price gap up to just under $110 a pound. And then we subsequently in February saw it pull back and, it hit a recent low of about $83 or $84 a pound in mid-March. And it's since bounced back into the high 80s. And look, when a commodity moves over 50% in less than a year, as this metal did in late 2023, you can expect a pullback, and nothing goes straight up, as we've discussed previously. And so I think it was a healthy pullback. We saw the equities take a bigger hit and pull back more substantially. And what we were hearing was, it was a few kind of institutional investors and funds that were lightening their position and some profit taking. And that's, again, to be expected in these kinds of markets. But clearly, I think we've seen the near-term bottom put in. And as you pointed out, we're now seeing a move higher. And I just emphasize the underlying fundamentals. They're as strong as they've ever been for this commodity. And I feel like I do say this most of the time when I've been on here, but
It's been accurate,
I'm as
though,
bullish
right?
as I've ever been. Yeah, I'm as bullish as I've ever been, and that keeps growing. Even though we have seen the uranium price move substantially higher, I think it's good to have some perspective. And as we've talked about in previous interviews, we're still a far cry away from the all-time highs, especially when you look at it in inflation-adjusted terms. We'd have to be trading north of $200 a pound. When we look at it relative to previous cycles, where we had the mid-2000s, the bull market then, which was in '06, '07, somewhat short-lived, kind of this blow-off top that we saw in early 2007, but nonetheless, that was through the mid 2000s was a very strong market, and then again in the early 70s. And I think that this market is much more comparable to what we saw in the late 60s and 70s, where you had an expanding nuclear fleet, you had real growth in demand, you had a lot of supply then, right? There was a lot of primary and secondary supply, whereas as we've talked about at length in previous interviews, the supply side currently is much, much more stressed than it has been really at any point in time. So when you have primary mine supply of about 150 to 160 million pounds and growing demand at about 200 million pounds, and that's one of the features here in this market I'm really excited about now, is the demand side is really coming into its own. It's accelerating. We're seeing not just new reactors coming online, Everyone knows that narrative, but we're also now seeing a lot of nuclear reactor and plant extensions, right? And that's a key thing in the West, where we weren't seeing that even 5, 6, 7 years ago. So it's not just new reactors coming online, it's existing reactors that are getting life extensions. And then you layer on, in the next 5 to 10 years, the advent of small modular reactors. And one of the big kind of talking points in the industry recently at these various conferences has been, the growth in electricity demand as a result of the AI industry, this massive emerging new industry requiring these electricity intensive, power intensive data centers. And really, I mean, if you look at it, the only kind of real way to power these data centers with clean electricity, baseload electricity, is nuclear energy. And we saw Amazon sign a contract with Constellation Energy, which just shows the potential for these data centers to be powered by baseload clean electricity generation from nuclear power. I think we'll continue to see that trend, especially as small modular reactors come onto the scene and you can co-locate these SMRs with these energy intensive data centers that power AI. But there's lots of other industries that are contributing to rising electricity needs and demands, AI being a big one. Electric vehicles, we've talked about, cryptocurrency, the list goes on. The world's electrifying and we need more clean electricity. We're seeing nations, we saw this in December at the COP28 conference, over 20 nations signed a pledge to triple nuclear capacity by 2050. We just saw recently the first nuclear summit held by the IAEA in Brussels. Over 30 countries there that attended, again, working to build out the nuclear industry globally. And so this demand side is really kind of coming into its own, where, and on the other side of the equation, on the supply side, as we've again talked at length, we just simply do not have enough primary mine supply. Geopolitical challenges globally and conflicts are exacerbating that issue, and the flow and the trade of uranium globally, and so it's and nuclear fuel globally. So as a result of that, we're seeing this consistent upward pressure on the price. So getting back to what we were talking about with the market recently, I think again we take a step back, we look at what's happening here, yes, there's day-to-day, week-to-week noise, and we get these fits and starts, but I think the fundamentals are as sound as they've ever been, and will help drive a much higher uranium price as we go forward, to the benefit of the uranium equities and investors in the space.
No, listen, when we're not having conversations, and I'm not trying to bring, quality guests and information and companies to people on Resource Stock Digest, I also write, a paid newsletter under, the publishing company that my business partner and I co-own, and that being Digest Publishing. And I was writing about that just yesterday, how this commodity super cycle is different because a lot of the deficits that we're experiencing and will continue to experience are structural in nature. It's very different from past deficits that were, able to be made up quickly when demand waned. And that is simply not the case this time. And I think that point is lost on a lot of speculators. And I think that's why a lot of speculators are going to miss out, unfortunately, on the first 400% gains in the space, much like in the uranium space, where it happened during the first leg up, right? Companies went from 10, 15 cents to 70 cents in a hurry. And I think it's going to happen in the copper space. I think it's going to happen again in the lithium space. Gold is at all-time highs. Silver's up 4% today, flirting with new all-time highs, a couple of dollars away from there. So I think it's going to be an interesting couple of years. You did a brilliant job, Jordan, you and the team, of positioning Skyharbour during the bear market when it was tough, right? What wasn't tough was finding good projects. What was tough was financing and finding the dollars to go get these good projects. You expanded the portfolio, you joint ventured multiple projects, and now you have, co-flagships moving forward in a uranium bull market. That's starting to pay dividends here as the month of March has been absolutely busy for what was already a busy 2024. Can you speak to the multiple joint ventures that are now seeing partner funded exploration? And then can we talk about the co-flagships and what comes next there?
Yeah, sure. So yeah, lot to cover off there. So we've had quite a bit of news flow over the course of the last month, and we'll continue to have a lot of news flow and catalysts over the coming months as well, as we work our way through these winter exploration programs. So just a quick update on the various partners and their programs. So we've got the 7 partnerships currently, 3 of which are joint ventures, and 4 are still actively earning in. We just announced today one of our JV partners, a strategic partner in Uranium, has commenced a field program at the Preston project. This is the first field program being carried out at the project in 4 years. So very excited for them to initiate and commence this program, which will run right through the year. A budget of just under $900,000 Canadian. We're participating as a minority interest holder in the project and in the JV. They're carrying out some geophysics, some ground EM and gravity surveys to start, and then they'll be carrying out a fairly large soil sampling program this summer. So thrilled to see what they find. It's a big project located on the western side of the basin, just south of the Fission and NextGen. It's road accessible. It's a great asset. And even though it was quiet for the last few years, I think it says a lot that they're coming back and they've allocated a budget to this project this year. Right beside them at the East Preston project, which is being advanced by our JV partner Azincourt, they just announced a 1,500-meter winter drill program, which is underway and they're mobilizing for, and they've done some great work there. They're making good headway at the project. As I've said before, I think they're on the verge of a new discovery there. They're seeing all the right indicator minerals, elevated and anomalous uranium mineralization in some of the drill holes, relatively shallow drilling as well. So we'll be, again, participating as a minority partner in the JV at that program. That'll generate fair bit of news flow over the coming months. And then moving over to the eastern side, where most of our project portfolio is concentrated, we have 2 relatively new earn-in option partners that are drilling or have just completed inaugural drill programs at our South Falcon East and Falcon projects. These 2 properties have been optioned by Tisdale Clean Energy, which is our South Falcon East project, host to the Fraser Lake Zone B deposit. They just had some news out. The first phase of drilling, where they had confirmed the mineralization at Fraser Lakes, and they're gearing up for a second phase. This is a very important and exciting project in our prospect generator business, as it's a more advanced stage project that we did some work on before optioning the project to Tisdale. Again, there's a small resource there. There's lots of exploration upside potential. Really hasn't been drilled deep either, so there's lots of potential below the resource. And that's something that Tisdale is going to be continuing to test. So just a small amount of drilling in the first phase that's completed, lots more to come in the second phase and throughout the remainder of the year going into next year. And then right beside them at the Falcon project, our option partner North Shore completed a smaller inaugural drill program, intersecting elevated radioactivity, seeing some real nice alteration and indicator minerals in the core there. Now, both of these programs, assays are pending. So again, we'll have news out and our partners will have news out on the results of those programs. But a very good first pass for both, and again, more drilling slated at the South Falcon East project with Tisdale, and we're expecting, again, both companies will be continuing to work throughout the year as they earn in at their respective projects. So news flow from those two. We recently signed the official JV with our partner Valor at the Hook Lake project, which is just north of Falcon and South Falcon East. We are expecting some work from them at that project later this year, and that is host to a high-grade surface showing where previous samples returned upwards of 68% U3O8 at surface. So that's an exciting exploration property as well, being advanced by a partner company. And then we have several other option partners that we're expecting some work from later in the year. We don't have final budgets yet, but we will likely be seeing work done at Yurchison and Man Lake later in the year. And we're in advanced negotiations on new option partners and potential JVs at some of our other projects. So we've recently staked some more ground, added to the portfolio. We now have well over 1.4 million acres across 29 projects. It's a massive, massive land position. In fact, the third largest by acreage mineral tenure holding in northern Saskatchewan in the Athabasca Basin. So 29 projects, 7 of which are currently under JV or option. Two of them are our co-flagship Russell and Moore Lake projects, and then another 20 that we have 100% of. Some of which we're actively seeking partners and negotiating potential new option deals on. So keep an eye out for some new partnerships to be announced and new companies to come in and advance some of these other secondary projects in the portfolio. Now, going to our two main projects of Russell and Moore Lake, we commenced drilling an 8,000 meter winter drill program earlier this year. We're making great progress there. We're very, very happy with what we're seeing. Results are obviously still pending. We'll have some news flow on that over the coming weeks and months as we continue to drill at both projects. Of the 8,000 meters, 5,000 meters has been earmarked at Russell, and we're drilling, as I've mentioned in previous interviews, we're drilling 3 target areas, the Fork target, the East Grayling target, and the M Zone extension, which so far, like I said, very, very excited with what we're seeing. Russell is a advanced stage exploration project on the eastern side of the basin that is ripe for discovery, and I think we're going to deliver just that here this year. So far, very good. And we're going to wrap up or finish this winter drill program in the coming weeks. And the plan is, obviously, once results come in and are announced, we'll then get right back to drilling it in the summer with a program that's fully funded and fully permitted. And then at our Moore Lake project, adjacent to Russell Lake, which is the most advanced stage project in our project portfolio, hosted the high-grade Maverick zone. There's several high-grade zones. We've had drill results previously at this project of 21% U3O8 over 1.5 meters. That was within 6 meters of 6%. We've gone back in and we're drilling 3,000 meters in this winter phase. We're working our way through that currently. Again, very, very happy with what we're seeing. Results pending, but we're going back into the kind of few main high-grade zones on that Maverick corridor. We're doing some infill and expansion drilling currently, and we are planning to continue drilling through the summer and into the fall in a second phase of drilling later this year, which will likely consist of another combined between Russell and Moore Lake, 8,000 to 10,000 meters. So in total, 8,000 meters this winter at Russell and Moore, another 8,000 to 10,000 meters this summer and into the fall. So a minimum of, call it 15,000 meters. Given that our drill costs are quite low, it's Both the Russell Lake project's road accessible. Most of the targets are right off the road, so it's drillable all year round. There's an exploration camp there. Our drill costs are substantially lower than most other projects and exploration companies operating in the basin. Likely get a minimum of 15,000 meters, but could likely get upwards of 18 to 20,000 meters combined across the two projects. So our largest single year drill campaign we've ever carried out. And that's not including any of the meters drilled from the various partner companies I referred to earlier. So big year ahead. I think the timing's great with the market. You know, we talked a little bit about where we see the uranium market going this year. We're very bullish. I think it's still early on in what will be a much longer, more sustained bull market. And we're very well positioned to take advantage of that.
Listen, well said. Couldn't have said it better. That's Jordan for Uranium is Going Higher, and we're going to keep making discoveries to try to help provide some of that supply and aid some of the deficit that's going to be here again for years. This isn't a flash in the pan uranium bull market. I hope everyone is able to profit from it. Jordan, anything else that you'd like to add?
No, I think that covers it all. Lots of news flow coming up, so stay tuned, and looking forward to catching up in the coming weeks and months.
Overdue catch up. This one was a thorough one. Thank you so much for your time. Appreciate it.
Thank you.
All right, cheers. Hey everybody, Gerardo Del Real here. If you're enjoying the content that you just saw, you can let us know in 3 simple steps. Hit the like button, hit the subscribe button, and please share across your network and on social media. Take care, everybody.